office is obviously being a favorite topic in real estate.
Yeah.
We own an office from St. John's, Newfoundland through Vancouver. And the reason why I begin with that is the office for us is performed differently depending on unique dynamics of the market. One of the unique dynamics is commute times. Mm-hmm. So where we have had office in Regina, Saskatoon, Winnipeg, where you can get in your car, commute to work, it's 10 minutes, 15 minutes. Swipe data for us indicates that physical presence all the way from 2021 to now has been a lot more robust. And so for me, one of the proof points on the vitality of the office is around ease of access to it. And that matters a lot more, I'd say, today than it did in 2019.
Yeah.
Then within these big centers, it is all around proximity, which is not different than 2019. Proximity to transit, major transit. And we've had that theme for our investment thesis in the office space, but writ large, not just office, but sticking with office. That's been our theme for years and years pre-pandemic.
Right.
But it's just become a much more important theme today. And why is that? Well, I actually think commutes got worse for a variety of different reasons and the like. But also the reality is we are still bringing people back to the office as we sit here today. And the incentive to come to the office matters. Mm-hmm. And part of that incentive is it's easy to get here. Part of the incentive is the fit out. Right? Part of the incentive is the amenities. And that story has to be attractive still. And so, yes, I think I'm sure a lot of people talk to you about the bifurcation and, AAA, AA performs a lot better, et cetera. Yes, absolutely. And I think that is all a function of what I just said. And so we see that in spades. Fortunately, we've been oriented towards transit locations. We sold out of positions pre-pandemic and actually through the pandemic that were less well located, suburban office, for instance. And so our portfolio, where we have seen leasing, and we've done a couple million square feet of leasing in our office book in the last 9 months or so, where we've seen that happen is in offices that are well located. The 320 Bays Street as another example of where we've done a lot of leasing. There's been some idiosyncratic stories. So 777 for the Bay, very important office building for the provincial government here. Number of cabinet ministers in that office building. That's been a very strong performer throughout the pandemic. In addition, there's been other elements to the office story, like life science. And we have some floors in that building leased to the University of Toronto, the dentistry, and the med school, where there is life science activity happening. We invested capital to fit that out, so did the university. But we're very happy with, I believe it's a 99% lease building, which is different than the life sciences story going on in the States. And I could speak ad nauseum on that one too, if you want. But a very different story happening in the States there.
Right. We just don't have the supply to accommodate.
Yeah, we don't have the supply. We also didn't have the dramatic capital rush. We also didn't have, if I go back to clusters in our convo on venture cap, it's similar to life science, right? Life science originates out of university, medically intensive universities. And their teaching hospitals are where life sciences interacts between the medical school and the teaching hospitals. Physical proximity is important as a result. And so there is a lot of strategies around conversion of office buildings that were physically quite distant from the universities. So if you're a faculty member that's tenured with your lab, are you going to like a half an hour commute to some office building? No, right? You're going to prefer the lab next door to where your office is, right? So that physical proximity has been very important. And then the world of academia is very much focused on I don't want to say prestige, but I'd say the reputation, right, of the university. And so there is certainly a premium, let's call it, for the most renowned universities, which also matters if you're investing in the life science real estate that serves a lot of the researchers working in those universities. And ultimately, these are startup companies and scale-up companies. So therefore, the credibility of said university, the credibility of some of the pharma companies funding some of the commercialization and scale-up efforts, all that's super important. And so all I'm saying is you can look at it from a risk perspective, you can look at it from a return perspective. And as the gush of capital and the wave of capital went in, I'd say some of the risks were underpriced in some areas. And as a result, there's a lot of overbuilding. And as the wave of flow of funding into that sector receded, you're seeing some of the call it underpricing of real estate risk exposed.